Ever feel like you're drowning in information when trying to understand what's going on with a big company like Ford?
Yeah, there's always so much data to sift through, right?
Exactly. Well, today we're taking a deep dive into Ford Motor Company, cutting through the noise and focusing on what really matters for their stock right now.
And we've got a great set of sources to work with, covering everything from like the current stock overview and analyst opinions to their recent earnings and future plans.
So we're basically trying to extract those golden nuggets of insight so you can grasp Ford's position and potential without spending hours researching yourself.
Precisely. So let's get started with the stock's current state.
Right. As of April 7th, Ford's stock closed at $9.24, down 3.55% on the day. So at first glance, not the best news.
Not great, no. But we need to consider the bigger picture, right?
Of course.
Their market cap is sitting at $36.09 billion, but then their enterprise value is much higher at $174.02 billion.
And revenue over the last year.
Strong. $184.99 billion.
Hmm.
But here's the thing. Analysts are predicting an average price of around $9.85.
So maybe there's potential for growth.
Potentially, yeah. But then we look at the 52-week range. It's been all over the place, from $9 to $14.85, so some serious volatility there.
Talk about a roller coaster ride. Speaking of volatility, what about this economic moat concept? The analysis we saw said none for Ford.
Yeah, that basically means they don't have a significant competitive advantage to protect their profits.
So even though they're doing well with trucks and vans, they're still facing fierce competition, especially in the EV market, right?
Absolutely. It seems like they're struggling to establish that unfair advantage that would make them stand out.
Okay, so now let's shift gears to their performance. 2024 was a record year for global revenue, which sounds amazing.
It does, but their 2025 forecast tells a different story. Their adjusted EBIT, basically operating profit, is projected to drop significantly.
How significant are we talking?
They're estimating somewhere between $7 billion and $8.5 billion. Compare that to $10.2 billion in 2024. That's a pretty big hit.
Ouch. So what's behind this downward projection?
Well, it's a combination of factors. They expect to sell fewer vehicles overall. Plus, they're anticipating a less profitable mix of products.
And to add insult to injury.
They've got increased costs for launching new models. And, of course, unfavorable exchange rates aren't helping either.
So basically, a perfect storm brewing. And to make matters worse, they're projecting to barely break even in the first quarter of 2025. Yikes.
Definitely a point of concern for investors.
So let's break down their different business segments. Ford Pro seems to be their star performer, right?
Absolutely. Their commercial vehicle and services division is projected to have a strong year, with an EBIT of around $7.5 billion to $8 billion. Their Super Duty and transit lines especially are expected to do really well.
But didn't you mention something about pricing pressure?
Right. Even though Ford Pro is expected to perform well, there are concerns about pricing pressure in fleet sales, which could impact their margins.
Okay, so not all sunshine and roses. What about Ford Model E, their EV division? How are things looking there?
Still facing some headwinds, unfortunately. Despite increasing sales and implementing cost-saving measures, Model E is projected to lose a hefty $5 billion to $5.5 billion.
Wow, that's a lot of red ink.
Yeah, developing next-generation EVs and battery tech is a costly endeavor.
So it seems like the EV market is proving to be a real challenge for Ford.
No doubt, they're pouring resources into it, but turning a profit remains a significant hurdle.
What about Ford Blue, their traditional gasoline-powered vehicles? How are they holding up in this evolving landscape?
The outlook for Ford Blue is more subdued. They're projecting an EBIT of $3.5 billion to $4 billion. They're facing lower sales volumes and a less profitable mix of vehicles.
So cost reduction initiatives are crucial for them, right?
Absolutely. They're actively trying to mitigate these challenges as the market shifts.
And how about Ford Credit? Are they expected to provide some stability amidst all this uncertainty?
They are. Ford Credit is anticipated to contribute around $2 billion in earnings before tax, offering a degree of financial stability to the overall company.
Okay, good to know. Now, stepping back a bit, what's the competitive landscape looking like for Ford?
It's getting increasingly crowded. The analysis we looked at highlights growing competition, not only from established automakers, but also from those rapidly expanding Chinese manufacturers.
And they're all vying for a piece of the EV pie, right?
Exactly. So while Ford's got strengths in trucks and vans, and they're expanding their software and services, the intense pricing pressure is a real concern.
Yeah, it sounds like the whole industry is facing a margin squeeze. Speaking of concerns, what are some of the major risks highlighted in the analysis?
Well, tariffs are a big one. The possibility of tariffs on vehicles imported from Canada and Mexico could seriously impact Ford's profitability.
And then there's always the wild card of government policies, right?
Right. The uncertainty around EV incentives, production tax credits, and emissions regulations is a constant worry. And of course, supply chain disruptions are always a risk in this industry.
So it's a bit of a tightrope walk for Ford, navigating all these external factors.
It is. But they do have a long-term strategy in place. Their Ford Plus plan focuses on improving operational efficiency, cutting costs, and building recurring revenue through software and connected services.
And their EV strategy is a big part of that, right?
Absolutely. They're pushing hard to develop and sell affordable, high-volume EVs, though, as we discussed, profitability in this segment remains a challenge.
It'll be interesting to see how that plays out. Now, let's see what the analysts have to say about Ford. What's the general consensus out there?
Over the past 6 months, the average price target from analysts has been around $11.33. But if you look at individual opinions, you see a range of perspectives.
Ah, so even the experts don't have a crystal ball.
Nope. Some analysts are more bullish, others more cautious. It really reflects the uncertainty surrounding Ford's future.
So to wrap up, what are the key takeaways, both positive and negative?
On the positive side, Ford holds a strong position in the profitable truck and van market. Their focus on cost reduction is also encouraging. And their push into software and services could be a game changer. Plus, they're committed to the EV market, which has potential for growth.
But there's some significant challenges too, right?
Definitely. Those Model E losses are a big concern. The intense EV competition isn't going away, and the uncertainty around tariffs and government policies adds to the pressure. Plus, their overall profitability is projected to decline in 2025.
So it sounds like a mixed bag for Ford.
It is. There are reasons for optimism, but also reasons for caution. It'll be fascinating to see how they navigate these challenges in the coming months and years.
Absolutely. And for investors, it's crucial to weigh all these factors carefully before making any decisions.
Couldn't agree more.
Now, before we wrap up, we should touch on some of the concerns investors raised during the recent earnings call.
Good point. They were particularly interested in understanding that projected break-even EBIT for the first quarter of 2025.
Yeah, that definitely raised some eyebrows.
There were also questions about whether Ford's current EV strategy is the right one, given the constantly changing regulatory landscape.
And I imagine the overall economic uncertainty wasn't helping either.
Not at all. And investors were also concerned about those persistent losses in Model E despite increased production.
Plus, pricing pressure in the pickup truck market, the long-term performance of Ford Pro, and the potential impact of tariffs were all hot topics.
It's clear investors are closely watching how Ford tackles these various challenges.
For sure. So after this deep dive, it seems like Ford is at a crossroads. They've got strength in their traditional businesses, but they're facing some major headwinds as the automotive world shifts towards EVs.
And don't forget those external pressures. Competition, tariffs, government policies. It's a lot to juggle.
It really is. But that's what makes this industry so dynamic and fascinating.
Absolutely.
Well, we hope this deep dive has given you a clearer understanding of the forces shaping Ford's future. It's a complex story, but hopefully we've helped you make sense of it all.
We aim to provide you with the insights you need to stay informed and make well-considered decisions.
And on that note, it's worth thinking about how those external factors we discussed, government policies, competitor moves, even shifts in consumer preferences, could further impact Ford down the line, even beyond what we've covered today.
It's a constantly evolving landscape, and there are always unexpected twists and turns.
Exactly. So staying informed is key. And if you enjoyed this deep dive and want more insightful analysis like this, make sure to subscribe to our channel and hit that bell icon.
Your support helps us keep bringing you these in-depth breakdowns so you can stay ahead of the curve.
We appreciate you tuning in, and we'll see you in the next deep dive.
Until then, happy investing.